Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas.
Today we have an update on ITC Limited. Our analyst retains buy on ITC with an unchanged price target of Rs 515. The company's Q3 performance lagged our as well as street expectation due to lower than expected performance by the hotel and agribusiness. As expected, the company paid interim dividend of Rs 6.25 per share. The company drafted its strategic plans towards extending and growing the core business, building the emerging business and investing in new vectors to achieve consistent growth in the coming years. It has drafted prudent capital allocation plan with capex of Rs 3,000 to 3,400 crore per annum, largely focusing on improving the growth prospect of non-cigarette FMCG and paperboard, paper and packaging business, along with investment in digitization supply chain. The company has generated cash flow over the years, which has been adequately invested in rewarding shareholders with a high dividend payout. The stock continues to trade at valuation of 24 times FY25 and 21 times FY26 estimated earnings, which is at a discount of large peers. Any weakness in the stock should be considered as a good investment opportunity, considering its strong medium to long-term growth strategies. Next, we have an update on GAIL. Our analyst maintains buy on GAIL with a revised price target of Rs 200. Robust growth outlook across gas transmission and trading business and turnaround of petchem business led by higher utilization and gas cost optimization bodes well for strong earnings growth. Overall, we expect GAIL's EBITDA to clock robust 32% and PAT to clock 28% CAGR over FY23 to FY26, which is one of best amongst earning growth among oil and gas PSUs, along with marked improvement in its ROE up to 15.6% in FY26 versus 9.5% in FY23. Q3 standalone operating profit was robust at Rs 3,823 crore, which was up by 9% quarter-on-quarter and 22% above our estimate, led by stronger than expected performance from gas trading and turnaround of petchem business. Valuation seems reasonable at 7.7 times FY26 EV by EBITDA, and the stocks offer a healthy dividend yield of 3 to 4%.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.